what I'm going to do. So the dollar CAD, and again, get my free training underneath. Don't forget to like, share, comment, follow, and subscribe. I'm going to cut all these videos up, put them online. The dollar CAD, where you are specifically at this point in time, is quite interesting, because if you look over here, right, you've got one candle wick. You look over there, you've got another candle wick. So literally since 2015, and again, you can see it just like I was saying. You come off from 2002 all the way down, okay, and you find that your fall from 2002 is an awful long way to the point where you get into the financial crisis and then back out of it. So you would expect on a massive fall, and again, it's no coincidence, look back here, you would expect on these falls, you would get some kind of rally. And that's why the market moves in stages, that's why it repeats itself, because everything I've just drawn is a repetition, okay? These two areas are repeated here, this area down there is repeated there, okay? And within that, your stock oscillator or your RSI or whatever you're using, your moving averages, goes in and out of that and tells you where the price is higher than normal or lower than normal, if you like. So again, if you were shorting down here, you would have to understand that you've already lost an enormous amount of value. You've already gone from 161 and base almost halved in price, okay? So once you come up here, you get your fall, and then you get your repeated long zones along these candle wicks. So what you've got, essentially what I'm saying is, a long-term market of 8 years, and you've gone sideways. You're now entering the top phase of that sideways movement, very long term. So if you swap something like your monthly, you can start to see that a bit better, because you've got this candle wick here, and it looks a lot like gold, I know, and you've got this one here. So really you have to ask yourself, well, if we're going to come up here again, do I want to buy it? Do I really want to buy? We fell enormously at this point. We fell enormously at that point. So would you want to buy? If you'd sold up here for the last 7 years, you would have made probably a fair amount of money. If you had bought down here for the last 7 or 8 years, you would have made a fair amount of money. And it's very much what gold looks like, okay? Almost mirrored. So just over a different amount of time, more or less. So you can see that sideways movement. Your MAs are slowly catching with price. What's significant on the dollar CAD at the moment is this. You can see that on this monthly candle we're at now, you've had your pullback. You pulled back to very, very early minor support. Like I was saying yesterday, if you can't break through it, it's going to be a problem. And you're now seeing that price rejection. So if it does become the case that you end up here, wouldn't entirely shock me. But again, if you're skewing your risk, if you're skewing your results, you will be someone who is saying, wow, I'm going to short everything, and I don't believe the price is going to go higher, and it all ends in tears. So don't be that kind of person. You want consistency, you want to keep your risk the same. Coupled with what I just said about the fact you may beat the highs, okay, I did say to short here, if you did that, well done, you had a massive fall. I'm sure many of you exited. I said to exit, I said to get long, because you're hitting into all these key areas of support. This is why you need to actively trade, because if you don't, you'll miss all of it. So that was your exit. You can see that the very early price action levels that you fell to, which I've just labeled with these 2 arrows, have given you quite a comfortable area to bounce. So clearly, there is still upward bias in this. Clearly, people are still willing to buy. And that is why you're getting these big, sharp green candles at the moment. So I wouldn't be shocked if you get above this high here that I've drawn with this arrow and now this bubble. Wouldn't shock me whatsoever. If you are shorting it into the highs, just be a little bit more careful. And yeah, I think you may get above this. So I would probably consider reshorting up here, okay, lightly. That would be okay for me. But ultimately in the future, if it does become the case, you get way, way up 143, 142, you know, like I said, it wouldn't shock me at all. So it's really not a good idea to skew your risk by saying, you know what, I'm going to short massively here and I'm going to short massively there, okay? because you just don't know when it's going to stop. All you can do is simply take value on high prices, right? Trading and probability come hand in hand. Like I said, if you're trading at probable areas, based on logic and statistics and what's happened before, naturally you increase your chances of success. That's just a natural way that things unfold mathematically, or I guess based on what you can see already. Okay, it's a logical basis trading, or at least it needs to be. And I think a lot of people don't do that. They say, well, the dollar CAD is going to fall because of X, it's going to fall because of Y, it's going to fall because of Z. I would just rather look where people have sold it before and say, okay, well, if they sold it before, perhaps, maybe just perhaps, it looks slightly more probable that it may occur again at that area. So it's really, really important to understand that, especially as you get these rallies, because if you look at something like your daily, that is a very, very sharp push off your key 40 MA. So clearly, like I said, there is very strong buying bias or impetus, whatever you want to call it, force essentially, very early on. So people are clearly willing to take this long, okay? And it wasn't an enormous fall, but that became the case. It was such the case as well that it occurred around here. You can see you get the fall, and then there's still just nothing to pull it down. Okay, and you pull back up into it, and then you fall away much lower. That would look the same here if it didn't look like it does. It's come up, fallen, and then just come straight back up. So my point is simple. If you've seen people short it up here, okay, you've seen people short it up there, and you can see that, like I said, on your 12 monthly. Look, it's clear. The candle wicks are there. It would become more logical, based on what you can see, to reshort the same area. Like I said, that's fact. If you've seen it once, seen it twice, you would probably presume that it's more probable you may get it again. If in 5 or 10 years it gets even higher, you could short it even higher. But it's likely you'll be able to trade the market stage as long and short before you get to that point. Okay, so my bias really is short higher up. I'm not interested in buying this whatsoever unless you can get a really strong market fall down here, probably using that impetus when people exit those shorts to get to the long side. There's tons of price action in the way there. You've got your long-term sideways market as well, so that would be ideal. You can also see your stock oscillators high starting to peel over. So I hope that helps on the dollar CAD. Don't forget to like, share, subscribe, get my training underneath. So that's several